traders, welcome to the TMT stock market strategy video for Tuesday, April 26th. Well, we did get a little bit of a push lower, very slight push lower, and then again the typical sideways consolidation and one candle move up to get everybody out that was short, and then a move into the close. That's what we've been getting of late. April has been a horrendous trading month. Sideways consolidation for 8 days, 1 day up, another 7-8 days trading sideways, and another day up. I'll show that to you on the daily charts. I've showed that to you before. So April has been pretty much in the books for a consolidation month. Now, where do we go from here? Again, I've been saying that I do believe the bigger move is lower. And keep your palates dry here. Don't get stopped out. Let price action tell you which way it's going to go. Can we move higher? I think we're going to probably get a pop up to get everybody long, saying that we have a new leg of this bull market. And then I think that's when they're going to dump them. And that's where I believe, that's what I've been seeing. The markets are jittery. You see it all day while I'm watching the charts and trading. Just very, very jittery price action. You know what? You could just see, looks like that nobody wants to let the market go down, but that's fine because that's how the markets are made to fool the masses, to get everybody long and or short for that matter at one point. And everything that we see here, I'm going to show you a few indicators. There's a lot more behind the scenes, but I'm just going to show you what I do believe that the markets may push up one more time. But after that, I do believe that we will get a bigger move to the downside. Selling may go away is here. Not saying that you put your emphasis on that in trading, but you have to be aware that May is usually notorious month, for market sell-offs. Okay, VIX right in front of you, VIX at the or near the lows for that matter, closed at $14. As you can see here, big band of support, and that's something that for those of you who are trading, you need to be aware of that. We are basically at the lows. What would happen? Well, I'm looking for that Bollinger Band break to the downside. That means that we should get a push in the S&P up. And then after that, I would conclude, I think we go back into the Bollinger Band, and then we start to move higher in the VIX and start to move lower in the S&P. All right? So that's the VIX for you. Let's take a look at stocks above the 50-day moving average. Showed this to you before many times. We were at 95%, guys. Now we're at about, let's say about 78%. Still at these lofty levels. Every time we get a push up here, we get a market sell-off. Okay, that's what happened here back in November, December, and that's what I believe is going to happen here. How far do we go? No one knows until it happens. But watch and be careful if you're holding longs. I would suggest not to, but again, follow your trading plan. S&P versus the ATR, another good gauge of volatility. We virtually have none, so that means that everybody is one-sided long. You could see that every time we get down to these levels, okay, right around here to 16, you could see that we had a market start to pop up, meaning that we have a market moving lower, okay? Rise in ATR, market moving lower, okay? So that's what happened here. We're moving up. We have a lower ATR now. The question is, how far do we go up again, and where does the S&P go down? Remember, it's diverging. We're going to get that convergence at one point. And that's something that we need to be aware of. Keep an eye on that ATR and the S&P end of the day. It definitely is a healthy tool for you guys to deal with, okay, to understand where the market may be headed. And this is just showing you why I believe that the markets are pretty much ready to vacate these areas here. And even if they pop up, it's going to create a great selling opportunity. Do you sell now? No, of course not. Follow your trading plan, number one. Number two is, just because price is at these areas, that does not mean it can't go higher and stop you out. So let's be patient here, and let's watch when the markets go. But I do believe it's going to create great opportunity in the next couple of weeks. All right, advanced decline with volume. As you can see, when we had this rally up, right, from the February lows, look at what's happened here. You could see that. Let me just get the cursor out. You could see here that we had a nice big move up, and look what happened. We came at these highs, right? Well, what's happening now? Let me erase that. You see that we aren't as strong as we were in this previous move. So the new leg here that we had, yes, we did come in a little bit, but look what's happened here. Lower high from the previous high. Again, just showing you some stuff to be careful, okay? Bullish percent, SPX, based on point and figure charts, highly reliable. And as you can see here, we're starting to intertwine here. Like we're going this way and back and forth. That's also telling me get ready. We're going to vacate the area. And at 78%, I believe that the next area will be a down move. Okay. Again, we could come back up again a little bit slightly and take out this little interim high, but I do believe the next move is going to be lower, guys. All right. All right. Now let's take a look at our 5-minute chart. I get emails all the time, and they say, well, how do you know how much activity you should be doing as far as a trader? Well, first of all, you need to know that. Second of all, take a look at that 15-minute range. You could see here marked in orange. We had one push lower, right? We had a small little back test where you were thinking, okay, well, maybe we look to short here. And sure enough, we went sideways all afternoon, one pop up, and then sideways the rest of the day. And then a short cover and rally here. So does that look like any activity of trading? Looks like a big stop out for your trading account. All right, guys? Be patient. You need to be patient. It will come. This is not a good trading day, nor was Friday a good trading day. You can see it from here. Friday, I mentioned again, was a horrible trading day. Same thing. Look what's happened. This is going down on the books in April as a consolidation month. All right, one push up and then sideways the rest of the day. Same thing. This is a non-event. This is something that I wish not to trade in. Please, you should do the same. Follow your 15-minute rule. If it breaks above or below it, okay, this is where I start to look for shorts right here, right? If I'm looking for shorts here, I also need confirmation. Okay, so now we have our break below the 15-minute channel. This is how I would trade it. Okay, Mark, great. Got a break below. All right, let's look for a back test. Beautiful bear flag. All right, now, could you have gotten short here? Sure you could, but look what's happened. Get a little bit more confirmation. And that was the only move you got, and you probably got stopped out for a flat. Okay? This is not any movement, guys. We need to really separate and make that lower high from the 15-minute range and then move lower. Okay? But that's how I'm looking at gauging my appetite for the trading for today. Is it good? Are we outside? Is market trending outside range, whether it be to the downside or the upside? That's not the case here. You can see that. All right? UUP ETF, Bank of Japan's meeting. We have FOMC minutes also. The UUP, the dollar, is going to be a big mover this week, no matter what, up and or down. I did mention last week we had a bullish falling wedge. Yes, we did break out. Most of the time on a bullish falling wedge, we do get a higher low, and then we really break out to the upside. So that's what I'm watching, and if that does happen, we get a good breakout, and we get a good Bank of Japan minutes saying that they're going to start doing negative interest rates, the dollar will explode higher. That means that commodities will put a burst in the commodity bubble, or at least in the bulls camp for now, and then that's going to be a great opportunity to look for gold and silver. And look to buy into that. Right now, you don't want to buy into an 8-week, 9-week rally at the highs. Let it come in. It will come in. And that's where the dollar is going to come into play here, okay? Next is going to be the VIX, the VXX ETF. I'd like to trade this one a little bit easier. It's a nicer trader, but it is at the lows. I did mention that. I showed you the VIX. Just wanted to show you where we are here again. Yes, we can break down, but usually if we break down, we'll come right back up to the channel. Spiders. Take a look at what's going on here, guys. We're starting to get some negative divergence in our MACD and RSI. Okay, you can see here that we're starting to roll over as prices are basically holding in at the highs. So that's another word of caution here. Just use caution here when you're trading these indexes. We haven't gone anywhere. You can see that clearly. The month of April, we haven't gone anywhere. Yes, the transports do look good. It is our leader. We're back below that downtrend line, but it is looking constructive to the upside. Maybe you could even call this a small little bull flag here. But again, it has been weak for the last 2 years, okay? But this is definitely a nice little bull flag. You can see here, path of least resistance should be to the upside. Would help stocks, but we're into some heavy supply here. So let's keep that in mind also when you're trading. But definitely take a cue from the transports and see which way this thing does break. Russell 2000 IWM, good gauge of risk, doing quite well. It started to pick up momentum as well to the upside, but has a lot of overhead resistance here, guys. Lot of supply, 120, 115, a lot of overhead supply. So I wouldn't be so overzealous to the upside at the moment. And again, we could push up, absolutely, but that push up is going to probably create a better selling opportunity than a buying opportunity, especially coming off 8 weeks, 9 weeks of trading. Diamonds lagging indicator, lagging index, and that's just kind of pulling into the channel. Nothing wrong with this at all, just that it's just stretched and it's a little bit overdone. But again, we could start moving easily back up to the top of this channel here, this upward trend line here. So I'm using caution, and I'm a little leery with what's happening with earnings. You could see here, again, we have a little bit of negative divergence on RSI with price. You could see that here. And quite frankly, earnings have been dismal. Q should be down probably 4 or 5 points from where it is. We have Google, Microsoft, Rambus, Intel, you name it. Did not beat, looks horrible, and yet they're still holding it up. To me, that's a big red flag. If this was a healthy market and this was a good market, they would be selling these stocks at 20 times forward earnings, fully valued market. Remember, Europe is trading at a discount to U.S. Eventually, they will put their money into Europe and Asia. They're not going to keep their money here. So just keep that in mind. That's also going to help fuel a sell-off, okay? Hope that helps, guys. Have a great day. I know it's a little bit long in the video, but I wanted to make my point. I wanted to show you the indicators. Very important. Have a great day, everybody. We'll see you tomorrow.